It's so important to remember we're coming off one of the most profitable periods ever in Corn Belt crop agriculture.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. I'm so glad you could join us today. And I just want to remind you to make sure you like these videos, subscribe to the videos by clicking on the bell icon down below, and share them with others as well. And thanks to you, we are still one of the fastest growing ag-related podcasts out there. And we sure appreciate your help. My very special guest, Scott Irwin. He's the professor of agricultural economics at the University of Illinois. Scott, I'm glad I get a chance to visit with you. This is an unusual year, to say the least. We've had a big disparity between the Western Corn Belt, the Eastern Corn Belt. The West is wet, the East is dry. You're kind of stuck in the middle from what I hear. You have pretty good conditions there, right?
Exactly. There certainly is a lot of variety. I think we have reached kind of a tipping point on the crop, and that's certainly what the markets are reflecting. Really interesting. Lots of the Eastern Corn Belt was nearing a critical juncture in terms of soil moisture, pretty dry. We needed water, and soon, because we're in the critical pollination phase. And gosh, just barreled up the Mississippi Valley, and in about 14 hours solved almost everybody's dryness problems here in the Eastern Corn Belt. And I can honestly say, being out the last couple of days, that the Illinois corn crop looks as good as I have ever seen a corn crop, and it is for hundreds of miles. So we're, I think, in the Eastern Corn Belt in very good shape. Obviously, that has to be balanced by a pretty good sized chunk of corn ground in southeastern South Dakota, northern Minnesota, extreme northern Iowa, that's clearly been roughed up by too much water and probably lost several 100,000 acres of corn. But overall, my perception is that we're going to have a good crop. The only real question at this point is how good is it going to be?
Well, you know what you say about the Central Corn Belt was actually verified by some viewers who posted comments on our podcast here this past week, talking about how really, they hate to say it, but in that part of the country in Eastern Illinois, they've never seen their crop look so good. Meanwhile, in other areas, they don't know if they'll even get a crop. Let's talk about that northwestern part of the
Mm-hmm.
Corn Belt right now. Lots of areas were underwater.
Mm-hmm.
Even if the corn did survive it, I don't know if it's going to make much. The river system was so flooded, it was like the Great
Mm-hmm.
Lakes out there, from what I understand. Do you think there's a possibility that we lost lots and lots and lots of acres, especially considering the last USDA acreage forecast?
I think the lost acres, and there are some from the flooding, um, are going to be well under 500,000 combined, or around, or if you want to be pessimistic, 500,000 acres combined for corn and soybeans. We picked up that much on corn in the last acreage survey. So we have plenty of acres of corn and soybeans in the United States. And uh, the good crops are such a large area now. Most of Iowa is in quite good shape. I know my family farms in west central Iowa, and I know the reports I get there is it was a bit of a rough start, but looking very, very good now. And so, again, it's very unfortunate for the people that do have the flood problems, and it's certainly not a small area. But I think right now the market's telling us that those problems are being swamped by the good areas.
Well, what's your overall feeling about that 91.5 million acres, basically? I mean, is that achievable, or do you think
I think we're
USDA
going
is going to have
to.
to adjust it?
I think that it will probably harvested acres. I don't think that their planted acres will probably change a lot. There's always sampling variability when you get to the final January numbers. But I think we are going to lose some harvested acres from the areas that have been affected. Um, I, like I said, my guess would be um, combined for corn and soybeans, maybe a 500,000 acres. So we will lose some.
Do you think that flooding impacted soybeans as much as it did on corn?
Well, we know that there's the potential to plant soybeans much later and uh, and recover some yield potential. And so, to the degree that it was possible, because of chemical programs and so on, there's limitations, and depending on what people decided with their crop insurance policies, yes, there's a potential to pick up some of that back in soybean acres, but I I, I don't think either of those are going to be big impacts.
What about the maturity? The eastern half of the belt, they seem to get stuff in pretty early. The western half was pretty late. What does that mean?
Well, I mean, in those affected areas that you're talking about, that we've been talking about, there clearly could be some maturity issues and some concerns about an early frost. But right now, through the bulk, the heart of the Corn Belt, the crop is largely tasseling everywhere, right on a normal schedule. And assuming we get the adequate heat units between now and Labor Day, um, we'll have to have a really historically early, something like Labor Day or shortly after major frost to cause problems in the bulk of the Corn Belt.
Well, and part of the reason I was excited to be able to visit with you in particular, because you are an ag economist. We're not looking at things from the agronomic side as much as the potential to make or lose some money on the crop this year. Okay, if we do have that much acreage, and if we don't lose as much as some people are thinking, the market has taken a big dive here in the last few weeks, but my goodness, we already have a big overhead, if you will, of carryout stocks on the corn. That could get even much bigger, couldn't it? I mean, that doesn't bode very well for marketing opportunities the rest of this year.
No. Unless something dramatic happens on the supply side here, and there's a lot of time left, and we know weather can change rapidly, so it's important to keep in mind this is not a done deal yet. The corn and soybean crops, um, uh, but based on the higher acreage in the last USDA acreage report, plus the grain stocks report, I expect on Friday that the USDA's updated 24-25 ending stocks will probably be in the neighborhood of 2.4 billion bushels. And if we have the kind of corn crop that I think we might have, um, we'll be pushing the upper twos on ending stocks. And there's no good news in that for pricing opportunities. So in all likelihood, unless weather takes a dramatically negative turn here in the U.S., we'll have to be looking for any potential weather issues giving us pricing opportunities with weather issues in South America.
How much of a role do you think crop revenue coverage is going to play this year?
Some, um, but right now, prices have only now just fallen to the point where we might be getting some indemnities when you take into account the price has fallen enough, but there's obviously in most areas above APH yields likely. So that means price has to fall even further to get indemnities. So not a lot of help there yet, although that's certainly a possibility. Probably more help coming in the form of the government payments from our ELC type programs. And I haven't run through those calculations yet where we're likely to fall out on those.
So when would those become more defined or clarified for you?
At harvest, we'll be able to come much closer on what the likely 24-25 price will be, and that will then be fed into the payments on the 24-25 crop. We could already now maybe lower the prices for the 23-24 marketing year. We're going to tail off with some low prices. But again, I haven't looked at the specifics, but I'd be really surprised if we had any substantial payments for the 23-24 marketing year. I'm talking about what will happen with the support for 24-25.
And it's kind of discouraging, isn't it, that we've had a year-over-year increase in corn exports like we did? Didn't seem to help the market at all, did it?
Well, it's at least a start, is the way I like to look at it. That I guess the most optimistic thing I can say is that we're used to these kind of price cycles in agriculture, and if we are moving into one of the normal down price cycles, they're no fun for anybody, but we've lived through them before, and it won't last forever. And there will even be if we're in a low price part of the price cycle, there'll be opportunities for pricing within that period.
Do you see increasing use of options this year from farmers?
Kind of just the opposite. That farmers, we've been so rewarded since August 2020 by simply speculating on open corn and soybean bushels through the marketing year, because prices have been tending to rise, that I think that kind of conditioned people to continue following that strategy. And, that's not working well when prices are plummeting.
Well, interesting stuff. So I assume that you're going to be trying to stay on top of this, and you're fielding questions every day from people around the Corn Belt asking, how do we make the best out of this year? It's a tough haul, isn't it, to try and make any income. Can you even be profitable on a corn acre this year? Do you see that?
Well, this is where I think there's going to be sharp disparities in how to weather the storm. The biggest hits are going to be taken by younger farmers, more highly leveraged, and more cash rent ground and high cash rent ground. That's going to be the first wave of real financial hurt. And then you go to the other extreme of an older farm or farm operation that has less cash rented ground, maybe owns it all, not worrying too much about the opportunity cost of their money tied up in farmland. They're going to be fine. And those kind of families have made lots of money in the last 3-4 years. So it's important to also state, the sky is not falling financially, even though there's going to be large losses, if I'm right, for the 2024 corn and soybean crops. It's so important to remember we're coming off one of the most profitable periods ever in Corn Belt crop agriculture. And the real worry is maybe we're going to pull down our liquidity reserves faster than we expected, but there are large reserves out there.
That's a good thing. I guess I should ask you, do you think this is going to lead to a necessary decline in values of farmland and rent values next year?
Inevitably, this has to put if these price levels continue, I think you'll definitely see downward pressure on farmland values and cash rents. But boy, that market has been buoyant longer than I've certainly expected. So I say that with a big dollop of caution.
Well, there's been a lot of outside interest in farmland too, so that
Right.
plays a role as well. Well, Scott, thank you for taking time to talk with us. I appreciate that very much. It's always a pleasure to visit with you. Look forward to next time. That's Scott Irwin. He's a professor of ag economics at the University of Illinois. And we thank you for joining us. For producer Brianne Hendrickson, I'm Marlon Bowling. We'll catch you next time right here on the Comstock Channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.